Hello everyone. This lecture recording is for Bus 1 students where we couldn't complete activity 5.3, right? So in this video, I'll be explaining the answer for activity 5.3. So as you can remember, I discussed up to activity 5.2 where we had normal losses and then abnormal losses. And at the end of the lecture, I explained you the meaning of scrap sales as well. So basically, what do you mean by scrap sales? As per the example I discussed, when or if we can sell the loss units, it can be normal losses, it can be abnormal losses. When you can sell the loss units, the income you earn from that selling, you call it scrap sales. Basically, you sell your loss units to outside parties, then you earn an income. That income we call scrap sales revenue. Okay, that concept you already know. Having discussed activity 5.2 with normal losses and abnormal losses, I'll show you the answer. Normal losses and then abnormal losses, we can come up with the process account. And one important thing I explained you, when you write normal losses, when you have normal losses in a process, in the quantity column, you put that quantity. And I told you, usually we are not giving a value for the normal losses. That's why it indicates as 0, right? We are not giving a value for normal losses. I explained you the meaning as well. If you can remember, I told you the value of the normal loss is absorbed by the good output, right? So the value of the normal loss, we are not showing it separately because it is absorbed by the good output. That's why we are considering the value of the normal loss as 0, usually. And I told you there's one instance where we put a value for normal losses as well. That's what we are going to discuss. Right. So we'll discuss activity 5.3, the question, then you will understand the concept. Okay, now let me read the question. Nigamu PLC is a manufacturing business which produces several products through continuous processes in large batches. This is a similar question to what we discussed. The following information is relevant to the product Sigma manufactured by this business. So the information have been given. Input of raw material 2000 kilograms, cost of 1 kilogram of raw material 50 rupees, conversion cost 80,200. I told you conversion cost is the combination of direct labor cost and the manufacturing overhead. And then we have a normal loss, which is 10% of the input. And here in this question, you can see scrap value of a loss unit is 10 rupees. That means you can sell the loss units at a price of 10 to outside parties. Okay. And the output of the process is given 1720. Okay, now if we draw the process account for this question, I have already I already have the format of the process account, as you can see. So I will put the numbers. Input of raw materials, raw materials or materials. Quantity is 2000. And then cost of 1 kilogram of raw material 50. So you're putting 50 here, the unit price, and then we can have the value as well. These things you already know, we discussed. Okay, and then conversion cost 80,200. So I'm putting the conversion cost 80,200. That's it for the input. And then we have normal loss, 10% of the input. When you have normal losses, you put it here, normal loss, it's a credit. And then the quantity we can take 10% of the input means you multiply 2000, which is your input, by 10%, which is 200. Okay. So I told you, usually you don't have a value for normal loss. But see, there's a difference here. Now, as you can see, we can sell these loss units as well. Okay. So that's the difference. We'll come to that point later. So I told you, we have normal losses and usually we write the output as well. Output transfer to the next process. 1720. So I will write that number as well. So I told you after putting all these values, the next step is to tally these quantity columns. So I'm tallying the quantity columns now. This side 2000, this side 1920. That means we have what? We have an abnormal loss here. The 2000 debit. I'm not explaining much because you already know these things we discussed in detail, right? This is an abnormal loss. 2000 minus 7720 minus 200, your abnormal loss is 80 units. Right, so we have tallied the quantity columns. Now the next step is to calculate what? The unit price, okay? The unit price. Now, as you can see, I have the formula as well. Unit price equals, you take the process cost and you remove the normal loss value. I told you normal loss value. And then you divide that value by the input quantity minus normal loss quantity. So we'll take the numbers. First of all, how much is the process cost? I'm taking the total. It should be 180,200. 180,200 minus what is the normal loss value. Now, this is where you do this thing. You can sell these normal loss values. Anyway, the loss units at a price of 10 rupees. So here, what you do is, even though previously we didn't put a value for the normal loss, you put a unit price as 10 for the normal loss because you can sell these 200 units at a price of 10 rupees to outside parties. That is your scrap sales revenue. So what is that value? 200 units you can sell at a price of 10. That means even though you have loss units, even though you have normal losses, you can sell these 200 kilograms at a price of 10 and earn 2000. So that is your normal loss value. You're putting a value for here. So I can remove 108,200 minus, I'm writing 2000. 2000 is the normal loss value. And I divide it by input quantity. How many kilograms are there for the input? 2000. 2000 minus how many normal loss units are there? Normal loss quantity is 200. So I'm dividing 2000 minus 200. So we'll take the values now. Right. So I'm taking 180, 200 minus 2000, and then I'm taking 2000 minus 200. 1800, isn't it? 1800. So if I divide 178,200 by 1800, you get a value 99, right? 99, exactly 99. Okay, that is your unit price. So I'm putting that unit price to output 99, abnormal losses 99. So we'll multiply and see. When you multiply 1720 by 99, you have this value. Abnormal losses 80 multiplied by 99. You have 7,920. I'm taking the total. As you can see, the total is tallying. Debit and the credit sides. 180,200. So this is how you prepare the process account. Now let me go through these two simple T accounts as well. These are simple T accounts, as you know. We have abnormal loss account here. How to prepare it? Now you have an abnormal loss of 7,920. You have credited that 7,920 to the process account. So where's the debit? Debit is in the abnormal loss account. So I'm taking 7,920 to abnormal loss. This is coming from the process account. Okay. Okay, this is how you record it. And just check this scrap sales account. Scrap sales account is an income account, isn't it? That means a credit account. Scrap sales revenue. Income account, that means a credit account. How much is your total scrap sales revenue? How much is your total scrap sales revenue? Now, how many loss units? Loss units were there. How many loss units in kilograms were there in total? You had 200 normal loss. Anyway, you had a loss of 200 kilograms. Plus, you have an abnormal loss of 80 kilograms as well. So 80. Altogether, you had 280 kilograms as your loss units. Then what is your scrap sales revenue? What is the income you can earn by selling these loss units? You can sell at a price of 10. So normal loss units 10 rupees as well as your abnormal loss units kilograms in at 10 rupees. Both loss units you can sell, right? That's the meaning. Both loss units, not only normal losses. So you can sell your normal loss 200 plus 80 abnormal losses altogether 280 kilograms. What is your scrap sales revenue? 280 kilograms multiplied by 10 rupees. 2,800 rupees. That is your scrap sales revenue. What is the double entry to record this one? When you earn an income, let's say you received this in cash. So cash debit, you received cash debit, and then scrap sales revenue credit 2,800. 2,800. I'm writing as cash. Okay, right. And now another important thing. Here you have a normal loss value, normal loss quantity 200. You could sell that 200 at a price of 10 and earn 2,000. So out of this 2,800 income, what is relevant to normal loss? What is relevant? How much is relevant to normal loss? Only 200, right? Normal loss units 200. So you sold at a price of 10. 2,000 is coming from the normal loss. What about abnormal loss? Abnormal loss, how much? You had abnormal loss units 80. 80 multiplied by 10 rupees. 800. This is how your 2,800 is coming. 2,000 from normal loss unit selling. 800 rupees from abnormal loss unit selling. So I'm writing this 2,800, how we earned this normal loss 2,000, right? 2,000 coming from the normal losses. So I'm writing, this is a credit entry, no? So where's the debit entry? In the scrap sales revenue. Process account credit, we have already done that. And then the debit goes to scrap sales. So I'm writing 2,000. That is coming from the process account, which is your, within brackets I'm writing, which is your normal loss. Normal loss scrap sales. Right, 2,000. What about the balance? 800. When you remove 2,000 from 2,800, your balance is 800. That means the revenue you earn by selling the abnormal losses, 800. So I'm writing 800 here, the balance 800, that is your abnormal loss scrap sales revenue, 800. I debit this value to scrap sales account and I credit that to abnormal loss account, right? I credit that to abnormal loss account. So here I write abnormal losses and credit to abnormal loss account coming from the scrap sales revenue, scrap sales account. What is the meaning? Even though you wrote 7,920 here as the abnormal loss, so you identified 7,920 as your your abnormal loss. However, even though you have a loss like this, abnormal loss, you can sell these loss units. You can sell these loss units at a price of 10. You can sell these loss units. That means by selling your abnormal loss kilograms, you can earn 800 rupees. You can earn 800 rupees. Even though you considered you have a loss of 7,920, you can earn 800 rupees by selling those loss units. So now, what is your actual loss? What is your actual loss? Goes to P&L ultimately. Even though you have 7,920 loss, you can remove that earned income of 800. Your actual loss is only 7,120 because you could earn 800 rupees by selling the loss units. So that's how you tally your abnormal loss account. Okay, I hope you understood. And then you can see the scrap sales revenue, it became a temporary account. Anyway, you recorded it and then you divided into abnormal loss and normal loss. That is also tally 2,800. So this is the answer for the activity 5.3. Thank you.